Today, I'm going to be talking about MicroStrategy or Strategy, ticker MSTR. It's the biggest Bitcoin digital asset treasury company. A digital asset treasury company is a company publicly traded that owns crypto as its primary business. Over 5% of the total Bitcoin supply is owned by publicly traded companies. And this is around 94 billion. MSTR is one of the biggest, by itself owning 3.2% of the total Bitcoin supply. Just to give you a view of some other big cryptos, Ethereum also has 5% of its supply owned in these treasury companies, with BitMine being the largest at around 3.3% of supply, and Solana as well. Much smaller, but at 3%, with Forward Industries being its biggest holder. And you can check these out at sites like CoinGecko, and there's other sites that you can follow these where you can kind of keep up with how much these own on a regular basis. So MicroStrategy is the pioneer of this digital asset treasury strategy as a public company since it made its first purchase in 2020. But since then, there's been a lot of companies doing this that have been adding Bitcoin as well as other tokens like Ether and Solana. So just to give you just a recap of the top 3 companies and their market caps, Strategy for Bitcoin is the biggest at 46 billion. For Ethereum, BitMine is the biggest at $13 billion market cap. And for Solana, Forward Industries is the biggest, and it has a $617 million market cap. These 3 companies, tens of billions of dollars, the equity market has valued them. You're probably wondering why would shareholders buy these type of companies? I want to show you a return graph of MSTR versus Bitcoin over the years. And you can clearly see that in a bull market, MSTR outperforms Bitcoin. And so over the past 4 or 5 years, depending if you were holding MSTR and Bitcoin had a nice rise or a nice return, you would have had more return just by holding MSTR versus Bitcoin. And there's a couple reasons why. Number 1, leverage. These companies like MicroStrategy are able to borrow debt at a very cheap interest rate. And when I mean cheap, I mean even 0% or even 1% or less. A lot of times that's through convertible debt, which is debt that converts into stock later. So most investors, concerning especially retail, we can't go out and get a 0% interest rate or less than 1% interest rate. So that's an advantage of these companies. This allows MicroStrategy to buy a lot more Bitcoin, which if the market does well, they can get a lot more returns. Number 2 is the net asset value. And this is a more complicated concept that we're going to dive in deeper that you've probably read about in the news if you've been keeping up with MicroStrategy. And by market value, some people only look at market cap, but a lot of people look at enterprise value. And enterprise value is the market cap plus cash minus debt. For the holdings of a crypto for MicroStrategy, you simply look at how many Bitcoin they're holding times the current Bitcoin price divided by the total amount of shares outstanding as well. To get the mNAV, you simply divide MicroStrategy's enterprise value divided by the value of its Bitcoin holdings. And if that mNAV is greater than 1, it means the stock trades at a premium. If it's less than 1, that means it trades at a discount. Now, if MSTR trades at a premium, that is very advantageous. And the reason why is because if they do trade at a premium, they can issue more shares and sell for cash, take that cash and buy more Bitcoin. And depending on how much they do, that sale and that buy becomes accretive to shareholders. And by accretive, I mean it increases total shareholder value. Let's look at an example. So let's say that MSTR stock's price is $150,000 per share with only 2 shares outstanding. And let's say they also have just 2 Bitcoin on their balance sheet. And those Bitcoin currently trade at a market price of 100,000. 150,000 divided by 100,000 that gives you an mNAV of 1.5x, which means MSTR trades at a premium to the value of its Bitcoin holdings. So let's say that MSTR knows this and they say, hey, we want to sell more shares on the open market for cash and then use those cash proceeds to buy more Bitcoin. So they go out and they sell one additional share. And don't forget, one additional share is worth 150,000. So they're able to sell it at that price. And then they use that 150,000 to go buy 1.5 Bitcoins. And they can buy 1.5 Bitcoins because each Bitcoin trades at 100,000. If the premium stays the same, the new stock price or NAV price of MSTR rises 16.7% from 150,000 to 175,000. And you can see with the math how it makes sense, because now you have 3.5 Bitcoins, they're each 100,000, that's 350,000. If they still have that 1.5x premium, it's 525,000 is the value of the NAV. If you divide that out by the 3 shareholders, 525,000 divided by 3 shares is 175,000. And so that's up from 150,000 before. You can see the benefit of it trading at a premium because the company can just sell shares on the open market and immediately use that to buy more Bitcoin and create more shareholder value. Historically, for MSTR in a steady or prolonged bull market, they have been able to outperform, as I showed you earlier in the graph. But let's not forget, there's risk with every strategy, and especially using leverage. So the benefit of leverage, of course, as you know, more leverage, you could get a higher return. But on the downside, you face much more risk. And you can see this over the last 3 months. Bitcoin has declined around 20%, while MSTR has declined over 45%. Last but not least, if you're looking at holding a company like MSTR or another DAT or Digital Asset Treasury strategy, you have to believe in the skill of management. You have to believe in their ability to manage their balance sheet risk, to manage their operational risk, and them overall having the ability to execute effectively on their strategy. What has happened in the market recently that has caused a lot of headwinds for MSTR? The biggest thing has been the mNAV, or the multiple of net asset value, falling below 1. And if you can see the screenshot I'm pulling up, you can see that on CoinGecko's site, and they use an enterprise value calculation. So what this means when the mNAV is below 1, if they go and try to sell equity to raise more funds, it dilutes shareholders. That's been a huge problem for MicroStrategy because in the past they've traded at a much higher multiple. So selling shares on the open market to buy Bitcoin was accretive. Other main reason is that they have low US cash reserves, but they have hundreds of millions of dollars to pay in preferred dividends. If the mNAV is below 1, it may be hard to justify selling more equity to raise cash to pay these preferred dividends because you're going to dilute shareholders. And that's why I want to get to the point of what's the angle, and specifically what you should do if you're trying to invest in a company like MSTR or any other digital asset treasury strategy. Number 1, only invest if you are willing to take the time and effort to understand the company's balance sheets, the operations risk, and the strategy of the management. How much debt and preferred dividends do they have? How much cash reserves do they have? These are all things you have to understand and watch. What's the mNAV? These are things you have to watch on a constant basis. Number 2, if you understand and believe in these strategies, invest at your own risk. If you do not understand and you don't have the time to understand, just hold Bitcoin or Ethereum. If you hold Ethereum, just stake it or lend it out and get some yield. And just wait, because the fundamentals are clear. Bitcoin continues to be adopted by millions of users each year, and Ethereum is fast becoming one of the main platforms that we're going to see a lot of financial institutions, banks, and companies use as a platform for their business. What's the angle for digital asset treasury strategies like MicroStrategy and others, and what you should do to make the best decisions for your portfolio going forward? All right, till next time.